So I think now you can see my full screen.
Yeah.
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 Okay. So, Assalamu alaikum warahmatullahi wabarakatuh. First of all, Alhamdulillah, we got this opportunity to talk about some technology, and I would like to thank Brother Nazimuddin Faruqi of MCCI, who gave us his platform to present this use case of blockchain technology and cryptocurrencies. Am I audible enough to everyone?
Yeah, I think so. Okay.
All right. So, once again, Nazim bhai, thank you so much. You're always there to encourage people who try to come up with new ideas. And as Brother Abdul Qadir in his presentation has said that this technology is not going to die anytime soon. And the early stage of adoption is still beginning. Not many people in the world, out of more than 7 billion people, are aware of this technology. So there's a huge potential. This is still an early adoption. So those who enter into this technology space at this moment, they are like entering into Internet 1, Web 1 during 80s and early 90s. So in early 80s and 90s, it was difficult for us to imagine that a time will come where we cannot survive without internet. The blockchain technology will be much more than internet of today in foreseeable future. So cryptocurrencies investment opportunities, how and why? That's the topic of my presentation. And the agenda for my presentation is what is a Bitcoin and who is Satoshi Nakamoto? I'll just talk briefly about his white paper, how this has came into being, basically. And then I'll talk about a little bit about Bitcoin mining, how Bitcoin is generated, how it is mined. Is it still profitable to mine Bitcoin? And what are other alternatives to Bitcoins, like altcoins, that are all kind of cryptocurrencies? Then I'll talk about cryptocurrencies, how to buy, trade, and store cryptocurrencies. And finally, are there any investment opportunities in blockchain technology, potential for investment? That's today's agenda. So let's start with what is Bitcoin. So right in the beginning, let me clarify that blockchain technology is not a Bitcoin, or Bitcoin is not a blockchain technology. Bitcoin leverages blockchain technology. Blockchain is just a ledger. It's kind of a ledger where data is stored. We will see as we go forward. So are there any other cryptocurrencies other than Bitcoin, and how is the market? Yes, there are many. There are, Brother Nazim said, around 5,000 cryptocurrencies, but so far till date, there are more than 9,000 cryptocurrencies. And these 9,000 cryptocurrencies have around 37,500 markets. So different pairs of cryptocurrencies all over the world. And as of today, the total market cap of the cryptocurrencies is almost 1.9 trillion. It will be pretty soon 2 trillion and more. But still, compared to billion, the gold, the stocks, the derivative, it's very tiny. So because it is very tiny, even at $2 trillion, so you can imagine the growth potential when it tries to come. So among all cryptocurrencies, we have like Bitcoin, we have Ethereum, Ripple, Litecoin, Zcoin, Polkadot, Cardano, Monero. These are all different types of projects that came into being after Bitcoin started in 2008 and 9. Then Chainlink, and all these there are, like as I said, 9,000 cryptocurrencies. Some economists view cryptocurrencies such as these Bitcoins and Ethereum as good as store value. So their features such as scarcity, divisibility, decentralized security network, and as a holder of transfer of value, this all makes it as a good store of value and hence a token for currency with which we can exchange value. So how this all started? Let us go back to the year 2008 when the financial meltdown happens and the entire world financial system collapsed. Big banks, big financial institutions, they all got bust. So during this mellow, a very genius inventor, we don't know if that is a one person or we don't know if that is a group of people, but they call themselves with a pseudonym Satoshi Nakamoto. They published a white paper, and that white paper you can see on the screen, Bitcoin, a peer-to-peer electronic cash system. This paper is the backbone of everything what we have today. So that actually triggered a financial revolution with this. So I personally strongly recommend all the audience in this room, take your time, download this. This is available online, this white paper, download it and read it. You will gain a lot of knowledge, how the mechanism of Bitcoin, how Bitcoin is produced, how it is created, and what was the reason behind this technology. So Satoshi Nakamoto, he was fed up with that financial crisis and the deception of the major financial institutions duping general public all over the world. So he came up with this very novel, revolutionary idea of peer-to-peer financial transaction. So I can transact, as Brother Abdul already explained, that two people can exchange value using this technology. They don't need any intermediary, they don't need any bank. So that is a very powerful revolutionary alternative that is presented by this inventor Satoshi Nakamoto. So what is a blockchain? It's just a ledger or a database. It is distributed across and maintained by a large number of computers, which we call as nodes, in contrast to it being held by a single entity or a single party like a central bank or a federal bank. The goal of the technology behind cryptocurrencies such as Bitcoin is to make it possible to reach an agreement or consensus on the validity of the data in the database and that of the data to be added to the chain of database. So data in this case refers mainly to the online transactions, data that determines ownership of digital assets such as cryptocurrencies, or you can, whatever you are able to use a cryptographic hash, whatever you have, information, data, whether fungible token, as Brother Abdul said about non-fungible token, there are different things. So you can, the moment you convert it into a cryptographic hash, you can put it in the blockchain and you can use it. So let's take a little bit deeper into the technology, how it works. I will not go into technical details. I'll just tell you, I just took this out from the Satoshi Nakamoto's white paper. You can read it at leisure. So the transactions take place between two people or any number of people within the chain, and the owner's public key and private key and owner's signature, that is, all this information is converted into hash, and that hash is passed on to into the chain, and this is verified in the reverse order and confirmed as a consensus within the chain of network. And once the block is completed after verification of the transaction, then that block is added to the chain. Like that, a number of blocks are added into the chain after verification by all the nodes within the network, that once a transaction is broadcasted, they verify the authenticity and genuineness of the transaction, verified it, agreed based on the consensus, and then add to the block. So this way the transaction is completed, then this transaction has a timestamp. So if there is a bad actor within the network, he wants to tamper. So the problem of double spending. So I send somebody, let's say, a ticket to a show, but then I sell the same ticket to 2-3 people at the same time. I can cheat them. But with this technology, the double spending is completely eliminated because of the timestamp. So what happens is with the timestamp and the immutable technology, the block is permanently stored, it's immutable, it cannot be deleted or changed. And then the provenance is that you can trace back to the origin of the data and verify it, whether it's, let's say if some hacker is trying to hack, then all the other nodes within the network get alert, and then they verify, and they will not allow this hacker to change. The only possibility for the hacker to change the data or manipulate or hack the system of this Bitcoin network is to capture 51%, more than 50% of the network. So imagine the amount of electricity, the amount of computational power that entity, the bad actor, has to gain all over because the nodes are not just at one location. The nodes or the computers within the network are spread across the globe. So this bad actor has to capture more than 51% of the network to manipulate or hack the system, which is the way Satoshi Nakamoto designed and limited the number of Bitcoins to 21 million as a fixed value makes it extremely expensive for any bad actor to manipulate the network. They will be better off to be honest rather than dishonest within the network. So this all happens as a proof of work. We will go through a little bit in detail of what is a proof of work, and then strong, very complex mathematical computation that goes beyond, behind the scene to confirm a transaction. And then once the block is added to the chain, the one who successfully add this block to the chain will be rewarded. And Satoshi Nakamoto, what he did, because let's say people within the network do some transaction, and other people who are maintaining the nodes, they're confirming, validating, adding all this transaction as a block to the chain. Why would they do that without any incentive? So what Satoshi did is he created cryptocurrency and fixed that amount to 21 million. And we don't know why he chose 21 million Bitcoin, but he did that. So there is a fixed amount of Bitcoins that are going to be ever existing on the face of Earth. There is no inflation in this Bitcoin. Unlike the federal banks, the central banks, the Federal Reserve, they print, they cut the tree, make a paper, paint it on it, and say this is IOU note, like $1 or whatever it is. That is not going to happen with Bitcoin. It is a fixed 21 million. So it's not inflationary, rather it is deflationary. Hence, with time, the value of it will go more, increase. So how a Bitcoin is created? Basically, there are miners who are maintaining these nodes. They are the one who mine, and you can see the picture here. This is one of the Genesis farming and oldest rig, Bitcoin mining rig in Iceland. Because the Bitcoin rigs are computationally so demanding, they generate a lot of heat. They also consume a lot of electricity, as Brother Abdul Qadir said. So people choose places which are colder in region, like Russia, Siberia, Iceland, and many other places where electricity is cheaper and you can run air conditioner. You can put a mining rig. And this is one of the largest mining rig that is mining Bitcoins. So miners are the people who compete to add the next block to the Bitcoin blockchain network. Miners use powerful computers and solve complex mathematical problems, as we have seen earlier, those complex formulas, and the problem to produce a 64-character alphanumerical character hash key that locks the block. For doing so, miners are rewarded in the form of a Bitcoin. So that is how a Bitcoin is created. There are people who, out of probably ignorance or lack of knowledge, they say that Bitcoin is created out of thin air. It's not like that. There's a lot of computational power, a lot of mathematical puzzle solving, a lot of effort behind the scene that creates a Bitcoin. So let's say, here is a simple example of how a mining works. Let's say we have a transaction. In that transaction, the data is one Mr. Usman. he purchased something on Amazon using 5 bitcoins. Within the same transaction, let's assume that one Mr. Mustafa, he purchased something on eBay using 1 bitcoin, and similarly Suleiman, he transferred 70 bitcoins to Ibrahim. This is one transaction, let's say. So what happens is there are 2 more blocks before this block. So I'm just trying to explain to you how the blocks are created and mined. So let's say this is a block 3. So what happens is this transaction and the block nonce is a number only used once. Number used only once. So this is part of the technology of the blockchain, and the previous hash of the block 2. Here is a block 2 here, let's say, and this is a block 3. So the hash of the block 2 is this one, previous hash. This hash, this data, and the block number 3 nonce, all this information is gathered and a new hash is created. This hash represents block 3. So once this is confirmed, this is added to the chain and block 3 is done. And what happens? How the new cryptocurrency or the new Bitcoin is created during this process? What really happens is the miners who are running this powerful CPUs, GPUs, with a terahash per second processing power, what they do, they start guessing the hash of the new block, and that is not easy, because if we go back, the nonce number only one used here is 21. So for them, the challenge is to correctly guess what is the correct nonce for this block. So they do a lot of trial and error guesswork using, and then the target should be below this 5012 nonce. That requires a lot of guesswork, and they do it, and one will guess like 23, 21, 22. These are all wrong nonce. Someone finally is able to guess a target which is less than the target of 5012. Once that is done with leading 4 zeros, this hash is added. I know it may not be very easy to comprehend as I'm explaining now without a background into the computers and blockchain technology, but just bear with me. This is a little bit of jargon right now. So once this is done, this hash is now added. That really makes a complete block, and that produces new Bitcoins. Those Bitcoins are rewarded as an incentive for those miners who were successfully able to guess the correct nonce to confirm this transaction into the blockchain, and then that is added. Hence, this is continuously going on within the Bitcoin blockchain network. Everybody is doing transaction, and the miners are making all this complex computational work behind the scene using powerful computers, the nodes within the network, and adding the new blocks. So this is how mining is done. So Bitcoin mining is the process of creating new Bitcoin by solving a computational puzzle. The result of the Bitcoin mining is twofold. First, when computers solve these computational problem on the Bitcoin network, they produce new Bitcoins. This is, you can imagine, similar to gold miners going into the mine and digging out gold from the gold mines. Bitcoin is exactly the same process, but it's done in digital world by computer specialists within the digital mining domain. So second, by solving computational problem, Bitcoin miners make the Bitcoin payment network trustworthy and secure by verifying its transaction information, as we discussed earlier. No, but this is not easy. There's a difficulty involved. So what is the difficulty? Difficulty refers to the relative measure of the amount of resource required to mine Bitcoin. This measurement climbs or falls depending on the amount of power consumed or the hash rate produced by the network at a given time. And as you know, from the time the Bitcoin is created, the way Satoshi Nakamoto designed the whole system, every 210,000 blocks, which So there is a chain, the chain has blocks, and each time the transaction is confirmed by the network, it is added to the block is added to the chain. And when 210,000 blocks are added, the Bitcoin blockchain network mining difficulty doubles every 4 years. This 210,000 blocks take 4 years to complete. So every 4 years, the incentive is half. This continues till we mine all the 21 million Bitcoin that are there available. So far, 18 million Bitcoins are already mined. The remaining 3 millions are people are competing with each other to mine the remaining 3 million Bitcoins. We will see whether this is a profitable business. So is mining still a profitable business? If I'm an individual, if I want to set up, I need a lot of cash, a lot of powerful computers, supercomputers maybe, to be able to mine. But if firms, large firms, they want to do it, they can do it. Brother Nazim gave the example of Tesla, who recently bought 1.5 billion Bitcoins, but Tesla is also building one of the biggest mining rig, I think somewhere in Texas, and they want to mine whatever is remaining from the rest of the 3 million Bitcoins. So those are the people who have money to build the infrastructure, as I have shown you earlier in the picture of Iceland, the complex infrastructure of mining rigs that they are going to set up in somewhere in Texas, I think, to mine the Bitcoins. So Bitcoin is not created out of thin air. It's a very complex mathematical puzzle that need to be solved to create a Bitcoin. So is it still worth investing in Bitcoin mining? I would say if you can pool, like many people come together, pool up investment money and then set up a Bitcoin mining rig that is still profitable. Or alternatively, you can simply buy it from an exchange if you want to buy a Bitcoin. Why would you want to buy when Bitcoin is almost $60,000? Because I would say that Bitcoin, and in fact, I would argue that Bitcoin is going to be the world's reserve currency going forward. Dollar is on its self-destructive mode. Going forward, dollar might be as good as a toilet paper. So nobody would use dollar. The governments will start declaring Bitcoin as their reserve currency. They used to do that to gold. Maybe this is my proposition that if we are able to connect digital gold with physical gold, that will be the super powerful financial alternative to the existing financial meltdown. So how the Bitcoin reward for miners is halving. This is the timeline that I talk about. The first halving happened in 2012. Where the block size was 210,000 and the reward for miners was 50 Bitcoins. So if you are able to add one block to the network of the blockchain, you're getting rewarded with 50 Bitcoins. Imagine 50 into $60,000 of today. In 2012, Bitcoin was probably like less than $100 or maybe $200. Then the second halving occurred in 2016, 4 years later, when the block size was 420,000, and the reward was half. From 50, the miners got only 25 Bitcoins. Now, recently last year in 2020 May, the further halving occurred. Third halving happened. Block size was 630,000, and the reward to miners was 6.5 Bitcoin per block. And in 2024, when the block size will be 840,000, the reward to miners will be further reduced to 3.25. This is a very intelligent way, the way Satoshi Nakamoto designed it, so that the circulation is maintained within the network and it's not inflated or dumped on people. The last Bitcoin that would be mined from the 21 million Bitcoin, the 21 million Bitcoin will be mined in the year 2040. Because the difficulty is increasing as we are coming close to the end of the network, in 2040, the last Bitcoin will be mined. until then, we are still miners have chance to mine, but the difficulty will be increased. Now, you would ask me after 2040, when there is no more Bitcoin available to mine, what is the incentive for the miners? Why would they continue maintaining the network? What are they going to get after that? That's a valid question. So after 2040, when the last Bitcoin is mined, the people who are maintaining the network, the nodes, the miners, they would get the transaction fees whenever two people they do any transaction using Bitcoin peer-to-peer from one part of the world to another part of the world, from this part of the globe to that part of the globe. That transaction needs some fees to be paid, and the miners will get the fees after all the Bitcoins are mined. That's still so the miners will still get paid for what they're doing now. And are there, so here's a little bit of the technical. I strongly recommend all of you to read that paper, and you will learn a lot. Now let's move to the fourth agenda. Are there any investment opportunities? So this, I just by chance happened to look at this. This is on April 1st. How a single mom makes 240,000 rupees per month in her spare time trading Bitcoin and cryptocurrencies. So people who are aware of it, who knew it, they are making a lot of money in this market. There are like fiat currencies like dollars and pounds and sterlings. There are bad actors in our normal day life who are doing bad things with dollar, who are doing bad things with pounds. There are also bad actors within the blockchain space. But the way Satoshi Nakamoto designed the system to eliminate the bad actors, blockchain network is still, it's not yet hacked, and probably it will never be hacked. Blockchain network, it's very strong. Are there really opportunities? Yes, there are. So where can one buy Bitcoin? If you cannot mine it, you can directly buy. There are many ways where you can buy a Bitcoin. There are centralized exchange like Binance, BTC, Kraken. In India, we have WazirX. It's a very famous exchange of India, operating since I think 2016 or 17. These are the different exchanges where you can open your account and right away transfer money from your bank account and trade in cryptocurrencies, in Bitcoin and any other cryptocurrencies that you want to trade. Are there any other ways where you can do it? Yes, there are decentralized exchange. I like the idea of decentralized exchange. Imagine a world where you control your own money. You are your own bank. And imagine where government cannot erode your wealth by printing money backed by debts, where you can store your money on your phone, on your memory stick, thumb drive, on your computer hardware. You are controlling your own money. You are your own bank. Imagine that. Just close your eyes and imagine that you are so independent of these intermediary third parties. And not only that, you're able to send it almost instantly to anyone in any part of the world with minimum cost. I think back in 2018 or late 2017, someone transferred $300 million within a few minutes, less than 10 minutes, by spending less than $1. Can you imagine if you get a technology that is allowing you to do this kind of transaction? Why won't you go for that? Decentralized exchanges give you that opportunity. You are your own bank. And some of the famous decentralized exchanges that are existing are Uniswap, PancakeSwap, and other peer-to-peer decentralized exchanges. So just Google it, learn about it, and you will know you can start trading directly peer-to-peer. So trading on WazirX exchange, if you want to open an account on WazirX exchange, you register it, and here is a referral link that I'm giving. If you use this referral link, you get a 10% discount on all your trades. This is a WazirX Indian exchange. If you want to do it on an international exchange like Binance, you can open an account there, exchange on Binance, and register using this referral link, and you will get a 10% discount on every trade. These two are very popular in India. So how do you store? Once you buy it, do you want to leave it on the exchange or you want to store it? You can store it in many ways. You can choose how you want to store your cryptocurrencies, whether it is a Bitcoin or Ethereum or whatever. There are online wallets, there are mobile wallets, there are hardware wallets, there are desktop wallets, and there are paper wallets. You can store wherever you feel comfortable. These are all different types of mobile wallets, hardware wallets, desktop wallets, and web wallets. It's up to you. You can look. And hardware wallet, one of the most strong and known famous hardware wallet is this Ledger Nano and Trezor wallet. They're a little bit expensive. It's worth buying them and storing it. The only downside of these is once you lose it, then you're gone. And once, as Brother Abdul said, once you forget your password, then it's gone. There was a guy in Canada. He was running a cryptocurrency exchange. And he died, and nobody knows the password of that exchange wallet. So I think more than $300 million worth of cryptocurrency died with him. So that is the downside. But you can have an alternative. You can tell the other person whom you trust about all your secret passwords, in case, that is always good to take precautions. So global adoption of cryptocurrencies, we are talking, is this still a buzz, or is it a Ponzi, or is it something really real? How the global citizens looking at it? What is the global adoption? So there is a Brother Abdul Qadir talk in his SWOT analysis about chain analysis. Chain analysis is a very good website. They do all the analysis of the cryptocurrency transactions, and they also figure out whether there is a money laundering, whether there is a bad actors. And all the governments of the world use the data from chain analysis to find out what's happening on cryptocurrencies. And as Brother Nazimuddin said earlier in the introduction, those who think that black money laundering can be easily done on cryptocurrencies, they don't know the technology. They cannot, as he rightly said, whatever is done, it's there on the network to pick for the people to know who has done what. So it's an open ledger. And chain analysis gives you all that information. You can go and verify, including your own transaction and some other person's transaction, what transaction has happened. So how the global adoption? So for any new technology that come up, people, this is a very famous curve. Initially, there are innovators who come up with an innovative idea that is so like Satoshi Nakamoto, he come up with this disruptive idea of financial disruption. So the curve starts and it reaches a peak of inflated expectations, and then the trough of disillusionment happens, and the slope of enlightenment again pick up. This hype cycle and technology adoption life cycle, which you can see here. So what clever investors do, they enter into the market here as early adopters. So in the beginning, this is a chart that people are confused. Some believe, some don't believe. Some think it's a bogus, some think it's a Ponzi. But then slowly, early adopters, the people who enter in this phase, they are the best beneficiaries going forward. Then early majority, because everybody in the town know, every Tom, Dick, and Harry, they know, they enter into that. And then some skeptics who don't believe, they are the late majority, they enter when the curve is going down. And then the laggards who really don't believe, and then they see that, oh, Bitcoin went from $100 to 19, 20,000, and then now the Bitcoin is 60,000. In a couple of years later, Bitcoin will be $220,000. Then these laggards will enter. So what we suggest, if you are interested, do some research and then be an early adopter. So the chain analysis global index, this was 2020 map. This is how it looks. Number 1 is the maximum people in that region has adopted. 0 means not many people has adopted. So there are many countries in Africa. Some maybe you will see, mostly in Africa they are not yet adopted because I think they don't have access to technology. But relatively, you can see the color coding of the global map, how it is adopted. And I would strongly recommend you to read this book, Saifuddin Amos, one of the best book, I say the Bitcoin Standard. You will learn a lot and you will know what the technology he is talking about. And then there's another, Blockchain Economy, a beginner's guide to institutional crypto economics. This is another, I've shown the link there. Right, so as I said, imagine a world where you could use your money not bank, where government cannot erode your wealth by putting money backed by debts, where you can store your money on your phone, thumb drive, computer hardware wallet, and send it almost instantly in the world at a minimal cost. So that's the conclusion. Do your own research. This is a revolutionary and disruptive technology. And in future, we will come up with another presentation, because there are so many Muslims who still don't believe this and they want to find out if this is Sharia compliant. So we are preparing another presentation. This presentation was a precursor to the technology. And then we also have a investment advisory. Brother Abdul Qadir has a company called Core Value. So we are offering high net worth individual services. So if anyone interested to invest 1 million rupees or 10 lakh rupees, we are offering high HNI services. If you're interested, you can contact us. So, well, I will conclude. A special thanks to Brother Nazimuddin Farooqi at MCCI for giving us this opportunity. And if you guys have any question, thank you for your attention.